Hey traders, welcome back to another video. Today we're talking about trade setups for today, things that I'm watching and looking out for in my own camp. I don't have a lot of trades open right now, so there's some things that are on my watch list that we're going to go over in today's video. Stay tuned, let's jump in. Welcome back everybody. So if you guys are new to my channel, I put out trading analysis and news coverage every day of the trading week. If you guys are new here, I want to invite you to hit that thumbs up button and subscribe if you have not already. Let's jump into what's been going on. So the dollar has been really strong, and I'm going to talk about that in more depth in a moment. The gold market, however, has sort of lost its glimmer, lost its shine, if you will, for lack of a better pun intended, basically. The gold market has fallen off a cliff here, it seems, from where I initially was long even. Fortunately, my stop loss did end up saving me here a little bit more than I would have lost otherwise. So a lot of you guys know yesterday I made a point about my gold trade, which I was long. And the most recent development on that is I did end up stopping out of that trade. So I went long here. I trailed out for a profit here. I re-entered again at this very same level. And when the floor fell out for gold, I basically stopped out of this trade for a loss. So overall, I'm about break even on my trading on gold here between the winner and the loss. But now going forward, the question that I'm getting a lot is gold now a buy? Like, is it going to go up higher from here now that we've tagged another key level? So I'll show you guys that on the daily chart. So a lot of people would make the point here that the daily chart for gold offers a really strong level of support around the 1980, 1975 zone that you can see here. So the question is this level going to hold? Clearly, the level that I thought, the 2000 to 2010 mark, would hold, it didn't really work out. So is this the level? Well, this gets into a tricky game where when I feel like we're in momentum, this is where I like to trade. When we start going sideways and we break key supports like this is where I pump the brakes a little bit and I wait for something to happen. Here's the thing, this very well could potentially even break lower and start into a downward trend. So I would say if you're trading gold, be very cautious that if this level breaks, I think it may be a bigger trigger to make a move lower off of the current volatility in the dollar. I think that could short term even be a possibility. Regardless though, the question is, am I buying? And the answer would be no. I don't have any trades open on gold right now. What I'm looking for before getting long again, technically speaking, is a breakout to the upside. So I've mentioned that this 2005 mark, this 2010 zone that I was watching so closely, when that broke to the downside here, that was my trigger to get out. My goal here to get back into a long trade on gold would be a surprise breakout to the upside, just like we saw a surprise breakout to the downside, which got me out of my trade. In order for me to look to get back in, I'd be looking for a breakout and then sort of higher lows and higher highs, that sort of thing, to try and find pullback opportunities going forward. So for me right now, the gold market is not something I'm watching super closely, though I am still bullish on it, just not technically speaking. I hope that makes sense, but the basic idea is that when it comes to my trading, I use technical analysis, fundamental analysis, and sentiment analysis. Technicals are your price action charts. Fundamentals are what is driving the markets right now, interest rate decisions, debt ceiling crisis, that sort of stuff. Those are driving forces that I pay attention to. And then also sentiment analysis, which is what we're looking at right here. We're looking at the COT reports, which show us what institutional traders are buying and selling at the moment that we're looking at it. We have an interesting little report from the COT report. So this is the positioning in terms of a percentage that they are long or short on different particular assets. What you'll notice is that institutional money is very largely long on gold right now. To flip it around, they're very short biased on the yen, which perhaps we could get into towards the end of this video. I have an idea on one yen pair that I want to talk about. But the gold market here still has a very heavy preference to the long side. So I'm just looking for that to materialize where the sentiment analysis ends up actually agreeing with the technical, right? So I want all of these factors here to actually agree before I look to get into trades. So we have a strong preference for gold on the long side from institutional traders. It's just not quite materializing into a technical trend at this time. So I'll pause on that for now. Also, guys, I want to remind you that today, yes, only today, we are doing a giveaway of 2 free free EdgeFinders. If you like the software tools that I use on these videos, my company A1 Trading, we build tools for traders, and we are handing out 2 free copies of our software, no strings attached. All you have to do in order to enter this giveaway is click the link that's in the description. It's going to open up a chat box where you can connect with one of our support reps here on our team. Let them know you want to enter the EdgeFinder giveaway, and two of you guys, we're doing 2 copies, will get free copies to the EdgeFinder. If you guys would like to join, again, it's free to join. Just click that link. Let us know what you like about the EdgeFinder. Tell us a little about yourself, and we'll enter you into the giveaway for a chance to win. Next, I want to talk about the dollar. And before I get too much into the dollar, I want to take a second to reference something that happened into our live stream here today. We had Gary come on, FX Big Dog, showed up on the stream today and discussed some ideas about de-dollarization on the dollar. Check this out. That concept about de-dollarization is absolutely worth noting as well, because that concern around the BRICS nations and potentially that, you don't want to sound like a doomsday or a prepper or anything like that. It's just the reality of this world. If you know your history, throughout history, right? Reserve currencies are not unique to just today, right? They've happened over and over. It was the British pound at one point. It was the German mark at one point, right? If you know your history, central banks bargain for power throughout history. And the question is now a serious one about whether or not the dollar will remain sort of this standalone privileged vehicle that it is, where it has, the command to bully other countries or not. And again, it's just being aware. If you're going to be a trader, if you're going to be an investor, you have to know about the concerns and what they might do to markets. And of course, I'm pro-American as always, so I'm not saying anything bad about America. So don't shut me off, YouTube. You guys are an American company. I don't want to be shut off, but but it is a worthy concern to mention, and I think that's a good point. What were you going to say next?
I was going to say, there's 2 things that that this country needs to start doing, and that is produce oil here in the US so we can become producers of oil rather than actually a import or an importer of oil. But become a producer of oil. One, that's definitely because that's definitely going to help our situation with regards to the reserve currency of the world. Also, another thing is we've got to stop spending. If we keep spending at the rate we're spending right now, we're actually going to cripple the dollar itself. It's like anything. Think about us as homeowners and people that earn a living to pay our debt. If we don't have money to pay our debt, what happens? We go bankrupt. That's the same thing that's going to happen to this country. This country is spending so much money that the GDP is not enough to be able to pay for the debt. And if we get into that situation, as we've just now getting into that situation where they now looking to increase the debt levels, if we can't pay our debt, if they decide that's it, that's the cutoff, and we're not making enough money to pay our debt, it's a problem. It's a huge problem for the dollar. So,
yep, absolutely,
a lot of things to consider there. But like you said, let's not become doomers of the world right now.
How do we trade it? That's the real question. How do we trade it?
Well, that's great. So the thing here is, and I don't want to be an ostrich with my head in the sand and not focus on the bigger picture, but also realize that there are smaller structures that we can trade, and so we have to once again be very, very, very aware of what's going on in the bigger picture. But at the same time, we know that there's opportunity on the smaller time frame. So if I go to the dollar, back to the dollar right here, we've seen the dollar actually showing a little bit of upside move. It's not quite the way other currencies are moving, because some currencies are actually like the euro, US dollar. We've seen the euro, US dollar selling off, but then you've got other currencies that aren't quite seeing the same sort of thing right now. So we've seen a little rally in today's trading, but again, it's still at this resistance level right here. And so it all comes down to how it completes this. Now, I would probably say be on the sideline with the any dollar cross at the moment right now until we get a good confirmation of what's happening here at this resistance. If this resistance does break, and I think I heard you say you're not a buyer or seller on the euro US dollar, and I think it's for the same reason, because you want to see what it does at that support level. Are we going to go back up again? Because we've had many times that the market goes in, breaks through, and then closes out back below right here, or even closes up above, and then the next day, trading day, comes all the way back into that range again. So we've seen a lot of false breakouts appearing in different forms. So I would say dollar looks interesting for a breakout, but I'm not convinced about that. I'm going to hang on to a little more data before I make a decision how I'm going to play the dollar.
So now that you've heard a little bit of the thoughts behind Gary and I's thesis on the dollar, let's look at the technicals. The technicals are pretty blatantly very strong to the upside, right? At least the way I do charting, we're looking at the 4-hour chart, and what we can see here is a series of pushes to the upside followed by higher lows, right? You can see there's a lot of strength in this dollar chart. So what am I looking for? If I'm sort of a bear on the dollar, and this chart is trending higher, am I just going to sell up here? The answer would be no. What I'm looking for on the dollar, for those of you guys who are watching it, is similar to gold. Flip the idea around. Instead, I'm looking for this thing to show weakness, right? I'm looking for it to show failure at levels of support. And once I sense that is going on, I see that's going on in the technicals, that may offer an opportunity to actually get short on some dollar pairs or perhaps just go long gold, right? That's kind of doubling up the idea there. When trading the dollar and trading gold, you're trading in many cases some of the same things, just inverted from one another, right? Interest rate hikes, good for the dollar, bad for gold. Flip it around, vice versa. You could trade a lot of your dollar ideas based on what's happening to the price of gold and that sort of thing. So yeah, the dollar, like I said, it seems very strong. Let's see how far this thing could go from a technical perspective. The thing and the reason why I'm avoiding jumping into a bunch of shorts in the dollar is because, you know, you've sort of seen this thing rotate from a downward market to a sideways market to now trending up. And the room to the upside here is seemingly pretty high. We'll see if it goes there. As mentioned in today's stream, I think that there's limited upside with the debt ceiling stuff, which is pushing the dollar higher right now, but we'll see how that plays out. And I'll just wait for price action to confirm where I can look for a sell before getting into one myself. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.